Hey, what's good, self-direct investors? I hope you're all doing great, and I want to welcome you back to my channel. If you're new here, my name is Jordan. I'm the mind behind Make More Capital, and today we're coming at you with a special end of the week earnings report. So before we jump in, if you enjoy this video or you learned something, please just leave a like on it as it really helps out my channel. And then of course, if you want to learn how to take advantage of this generational investment opportunity, subscribe below so that you don't miss any future videos. And there's plenty of content for you to go back, rewatch, and educate yourself with. I've tried to put all the news and facts in one place so you can watch episodes over time to learn about the evolution of the industry, identify top companies that you keep seeing pop up, and take advantage whenever you're ready. But we're going to start with this news from Marijuana Moment as 24 governors call on Congress to pass cannabis banking reform through the defense bill. So pressure is building, and we love to see this sort of call to action. In a letter sent to top lawmakers in the House and Senate on Tuesday, the state officials said the Secure and Fair Enforcement Safe Banking Act should be attached to the must-pass National Defense Authorization Act. The House has already approved its version and included the banking legislation, but it's uncertain if the Senate will follow suit. And that's obviously what we're going to be anticipating and watching out for the remainder of the month, while Colorado Governor Jared Polis led the letter, which is also signed by the governors of 22 other states and territories, along with Washington, D.C.'s mayor. And on top of that, better yet, the governors of Schumer State, Kathy Hochul, is among one of the signatories in the new letter, as is Booker's home state governor, Phil Murphy. Phil Murphy has also signed the new letter calling for immediate action on cannabis banking. And so considering you have the governors of Schumer and Booker State telling them to do their job, it's going to look really bad on the Dems if they simply decide that it's not worth putting this in the Senate when safe banking is the first step towards social equity. So we love to see this pressure building, and I just wanted to share this because this is from thestreet.com, which is an actual investing website, and very few times do we ever see stories that Marijuana Moment shares covered on other mainstream media outlets. Very rarely do we see that, but I just wanted to share this because at least this is on an investing site, which is giving investors a cue of like, hey, we're seeing some pressure as to why SAFE might end up staying in the NDAA. So just wanted to share that while we have this tweet from Representative Nancy Mace hosting a press conference Monday at 2 p.m. Eastern Time in D.C. for my bill, the States Reform Act, filing it on Monday. This bill puts states in the driver's seat and codifies existing cannabis realities in the U.S. So for present event and final bill text, you can check out the media kit here, and the link will be below. And while we did have reason to be optimistic that the Dems actually did flip the Senate and that Schumer might do the right thing based on everything he was promising, he's shown that he cannot be trusted as well. So that is why I'm jumping on the Nancy Mace bandwagon, just because I don't really pick political sides, but at the same time, this bill, the States Reform Act, is a much better bill than CAOA, and it has a much better chance of passing. So at the end of the day, whoever's going to free this plant, I'm on their team. So on to the earnings. Green Thumb Industries reports third quarter 2021 results. So highlights for the third quarter ended September 30th, 2021. Revenue increased 5.3 sequentially and 48.7% year over year to $233.7 million. It was their fifth consecutive quarter of positive GAAP net income, delivering $20.2 million or 8 cents per diluted share. And then adjusted operating EBITDA grew 2.4% sequentially and 52.6% year over year to $81.2 million or 34.7% of revenue. And this was their seventh consecutive quarter of positive cash flow from operations, delivering $82.8 million year to date, with cash at quarter end totaled at $285.8 million. So we're going to scroll right down to the comprehensive income statement. It's always very, very well put together and clean from Green Thumb. So if we take a look, they did increase their revenue up to $233.6 million from $221 last quarter, year over year, up from $157 million. And as we can take a look, their cost of goods sold did increase, but not nearly as much as their revenue did, which is positive because we obviously want to see their revenue growing more quickly than how much it costs them to make that revenue. So the fact that this number did not go up nearly as large as the revenue, I think that's quite positive for Green Thumb as a healthy operating business. For a gross profit of $129.5 million, up from $122.9, up from $86.9 million a year ago. While their selling general administrative costs also didn't go up a whole lot, which is good to see because they're not taking massive compensation packages like Canopy, for example, or some Canadian LPs, giving them a positive net income from operations of $58 million, up from $37.2 million last year. So all in all, very positive and a healthy, profitable quarter for Green Thumb Industries. And they always have a very nice balance sheet, so that's something we appreciate out of them just because this is what a healthy, comprehensive income statement looks like. So if we scroll up, just a few other details to pull out of here. Some of their retail business development. So Green Thumb's third quarter revenue included sales from 65 retail stores across 13 states: California, Connecticut, Florida, Illinois, Maryland, Massachusetts, Nevada, New Jersey, New York, Ohio, Pennsylvania, Rhode Island, and Virginia, with retail revenue increasing 7.3% sequentially, driven by increased foot traffic in established stores and new store openings. So there were subsequent events, I think just expansion. So if you wanted to pause and read, you can go through what they've done in every state: Virginia, Rhode Island, Pennsylvania, Massachusetts, New Jersey, and Illinois, but also expansion on the consumer packaged goods brands, because I think a lot of these companies are trying to get their brands into third-party dispensaries as well. As of September 30th, 2021, Green Thumb's family of consumer brands, Rhythm, Dogwalkers, Incredibles, Bobo, Dr. Solomon's, and now Good Green were produced, distributed, and available in retail locations across the country. But Green Thumb looks in great shape, as current assets are $420.8 million, including cash and cash equivalents of $285.8 million, with total debt outstanding of $206.5 million. While on October 15th, subsequent to the quarter end, the company raised an additional $33.2 million of debt at 7% under its $250 million facility. So again, another industry low interest rate, and the company will use the proceeds for general working capital, strategic investments, and other growth initiatives. And one thing I wanted to add, Green Thumb is laying tracks for strong growth in 2022, 2023, and beyond. Our net capital expenditures exceeded $70 million in the third quarter, bringing year-to-date net capex, and capital expenditures is money that you're reinvesting back in the business to build the infrastructure, to over $115 million. So today, the U.S. cannabis market is a $24 billion industry, and we believe as new states, new products, and new consumers come into the market, it can triple over the next decade, concluded Kovler. So is it good to reinvest this money that you're making from operations into the business now, or would you want to wait a couple years when it gets more expensive? You want to do it now. So it's very smart for them and all of their MSOs to get ahead and start spending money now while they can to continue this growth. So if you want to read some key recent developments, you can pause here as well, or read from Ben Kovler's management commentary. The link will be below as well. But yeah, just making it another impressive and profitable quarter out of Green Thumb Industries. On to Cresco Labs as they announced their third quarter 2021 results. The company reports $6 million sequential top-line growth with $11 million boost to bottom line for record adjusted EBITDA margin. And so we're just going to go through the third quarter highlights first. Revenue of $215.5 million, an increase of 2.6% quarter over quarter and 40.6% year over year. So the revenue has slowed down a little bit, but I think that comes from some of their adjustments that they're making to improve their margins. And gross profit excluding fair value markup for acquired inventory of $116.7 million or 54.2% of revenue, an increase of 90% quarter over quarter and 48.3% year over year, while their adjusted EBITDA was $56.4 million or 26.2% of revenue, an increase of 24% quarter over quarter. So this is where we saw the growth as they tried to focus on improving their margins this quarter, not as much just bringing in that revenue, which I think is better for the long run to try and get that out of the way early, while they manage record net wholesale revenue of $109.3 million and record retail revenue of $106.2 million from just 37 stores. So well done, Cresco Labs. So we're going to scroll down and go through their comprehensive income statement. So we can see their revenue increased 215.4, up from 209 last quarter, and up from 153 million a year ago, while their cost of goods sold actually decreased to less than what they spent last quarter. So this was very impressive to me, and I like to see this, that in June they spent 108 to produce revenue of 209 million, or 108 million to produce revenue of 209 million, but then in September to end this quarter they spent 107 million to make 215. So it's also good that they're trying to fix their margins now and spending less to make more revenue. I think that's very positive. For total gross margin of 108.3 million, up from 101 million last quarter, and then up from 76.8 million a year ago. But at the same time, they are improving their margins back to 50%, and that's where we want to see them. At least 50% of revenue is ideally what we want to see there. While their selling, general, and administrative costs did go down as well from last quarter, down from 71.6 to 69.5. However, the one thing that's worth noticing here is this large impairment loss of 290 million, and this likely came from them having to write off either goodwill or intangible assets that came with them acquiring Origin House, which was the distribution company that they bought in California when they got that exposure. But as we saw recently in the quarter, they decided not to distribute third-party brands anymore, and they're going to repurpose that so that it's going to benefit Cresco's margins as opposed to everyone else that they were helping out with this deal. And so because of that, yes, you sometimes do, when you reorganize a business that you purchase, you'll have to write off some of that goodwill or intangible assets. And so it's not cash though, it's a non-cash impairment, but that is why they have a loss from operations of 264 million. Without this cash impairment, they would have had a profitable quarter. So obviously they see this as the time to write that off because they have to write it off at some point. Better to do that now and, allow them to have a healthier Q4 when they report next month, especially when there's a lot of attention on the cannabis industry. Just wanted to go through all that, but that is why they did have a net income loss of 263.4 million compared to previous quarters where they were actually profitable as well, bringing in an operational income of 2.6 million last quarter, and then last year at this time bringing in 25.5 million. But then lastly, if we go down here, we can just see that if they add in the fair value markup for the acquired inventory as well, this would technically give them an adjusted gross profit margin of 54.2, a little bit up from 50. And obviously, the more money that you're keeping after subtracting cost of goods sold, the better for any sort of company. So just wanted to go through that. And this will also sort of just highlight Q3 results include a non-cash impairment charge of $291 million related to changes in intangible assets originally ascribed to the third-party distribution business, customers, and brands as a result of the strategic shift in California operations. And that is the cost of business. Sometimes when you make a purchase, it doesn't always pan out, but I think it's better to make that strategic shift now. And as we can see, it caused them to have a little bit less in revenue, but if they can increase their margins, that will allow them to hopefully get more revenue and more margins in future quarters. So besides that, though, they finished the quarter with current assets of $449 million, including cash and cash equivalents of $253 million, while the company had working capital of $240 million and senior loan debt, net of discount and issuance costs of $376.6 million. But on top of that, they're happy to announce that the company reported that its Summer of Social Justice initiative raised over $250,000, supported the expungement process for over 1,000 people with cannabis-related criminal records. So as a shareholder of Cresco Labs, I can feel good by investing in a company that is actually trying to right the past wrongs of the war on drugs, while some of their capital markets and M&A activity that I've covered over the last few months, you can pause here to read that, just helping them to get into some of these markets that they want to expand into. For example, just Maryland, Massachusetts, Pennsylvania, and Pennsylvania again. And at the same time, though, much like Green Thumb, the company closed an agreement with lenders to upsize its senior secured term loan, increasing the principal amount by $200 million and reducing the interest rate to 9.5%. So not as good as Green Thumb, 7%, but still probably much better than they were paying before, upwards of 10, 12, 13%, which is just not ideal, especially for growing business. So looking forward, their financial outlook, the company does reaffirm the previous provided guidance of gross profit margins in excess of 50% for the remainder of 2021, with adjusted EBITDA margin of at least 30% by the end of 2021, and revenue in the fourth quarter between $235 million and $245 million. So I'm still very happy as a shareholder of Cresco Labs. I think it was a great quarter, and I really just look forward to how they're going to expand their brands in the future, as I want to be invested in the company that has the #1 selling brands in the country. And lastly, on to Columbia Care. They report their third quarter 2021 results this morning with record quarterly revenue of $132.3 million, an increase of 144% year over year and 21% quarter over quarter. So that is the growth we were used to. So well done, Columbia Care, continuing to expand, and that is the cost of aggressively expanding, though. While record quarterly adjusted gross profit of $64.5 million, an increase of 205% year over year and 35% quarter over quarter. So that's impressive as well, with record adjusted gross margins of 49%, an increase of 965 basis points year over year and 527 basis points quarter over quarter, with record adjusted EBITDA of $31 million, an increase of 634% year over year and 89% quarter over quarter, while their record adjusted EBITDA margin of 23%, again, big increases year over year and quarter over quarter, while they revised their 2021 guidance to $470 million in revenue to $485 million, with $85 million to $95 million in adjusted EBITDA and 46% adjusted gross margins for full year 2021. So for a company that's aggressively expanding and trying to get into as many states as possible while it's still cheap to do so, it seems like it's paying off for them. Well, they have their financial highlights here in this nice little box. I'm going to scroll down to the comprehensive income statement just to go through everything, because I think that paints a much better picture. And this is comparing September 30th, 2021, this quarter this year, to this quarter last year, Q3 of 2020. So revenue, they increased from $48.7 million up to $132.3 million, while production costs did increase from $31.4 million up to $69.2. Mind you, doubling production costs is okay if you're more than doubling your revenue as you try to become profitable over time, with a gross profit before fair value markup of $63 million, up from $17.2. So it's at least good to see as they're increasing their production costs, they're keeping more profit afterwards. Plus, if we add any fair value adjustment of biological assets or inventory, which would be cannabis that they have that they can sell, that adds $9.2 million, less than what they had, I guess, in inventory last time, for a total gross profit of $72.2 million, up from $29.2 million there. Now, we look at the operating expenses, they have gone up too, but to produce more revenue, so that's totally normal. $61.4 million, up from $33.6 million. And then we can actually see that they had a positive quarter of income from operations here of $10.7 million, up from negative 4.3 last quarter, but it appears here with another expense net of $60 million. This is likely them paying their 280E. So MSOs also can choose which quarters they want to pay their 280E tax. As we saw, Cureleaf had a big cost here where they likely decided to pay it. Cresco didn't. They likely went with the impairment cost, but Columbia Care is also choosing to pay some of their tax now, and for that reason, after all subtractions, they did have a net loss of $36.1 million. But again, this is normal when companies are aggressively trying to expand and grow. That way, they see it as a way to become more profitable in time when they can actually cut their costs and get their operations running very efficiently. So 2021 outlook after that, though, they're looking at revenue. This was previously what they were giving, 500 to 530 million, revised guidance down to 470 to 480. Adjusted gross margins, they were expecting 47% plus. Now they're expecting 46% plus, and adjusted EBITDA 95 million to 105, down to 85 to 95. So besides that, I think it's also better to be more conservative in these estimates than to aim too high. So that's likely just why they're revising it. But nonetheless, I think this is a very healthy quarter from them. But since they are aggressively expanding as well, we can see here what they are doing in every single state that they're trying to get into. So please pause to read. I'm not going to go through all of them, but this is Virginia, what they're doing there, in Pennsylvania, Ohio as well, New York, New Jersey, Massachusetts, Maryland, going very wide like that Curaleaf approach, Illinois, Florida, Colorado, and California as well. So these are the select market highlights. Well, if we just go through top 5 markets by revenue, California, Colorado, Massachusetts, Ohio, and Pennsylvania. And that's why, although it's a struggle to be in California, it's a big revenue driver. So that's why companies do want to have exposure. While top 5 markets in adjusted EBITDA, Illinois, Maryland, Massachusetts, Pennsylvania, Virginia, definitely not California. But I imagine in time they will get those margins down, much like some other companies that are willing to compete in there. But I think this was a great quarter out of Columbia Care. Not profitable yet, but getting there as they aggressively expand. Better to do that expansion early when it's cheap than later when it's expensive. Now, just wanted to share another little clip from Zach McCollum here. So thank you for sharing this. Love the Jeff Bezos story. Seeing a bunch of Twitter nobodies tell a billionaire how to run his 5th multi-billion-dollar company, it is a big laugh. So just want to add, Curaleaf and Boris are focused on nothing but growth now, because that's what you got to focus on when you're in the early stages. And Curaleaf could stop spending tomorrow and our margins would go to 50%, says Boris. So there's a good story in here. I'm just going to relay it, but it's just, it's great. So enjoy.
EBITDA is almost an irrelevant number given the 280E tax, because it doesn't translate into cash flow. The most important thing right now is to build, grow, create new products, form factors, get out there and market, spend. Right now is the time to be spending. There'll always be a time to ramp up your profit. I mean, Curaleaf could stop spending tomorrow and our margins would go to 50%. I mean, it's what Jeff Bezos did in 2010 when he was sick and tired of all the analysts telling him that he can't be profitable. He took one quarter, he didn't spend any money, he produced $5 billion in net income. He got on the earnings call and said, okay, you guys see, I can make money. Now fuck off, I'm going back to doing what I did. And he created, the largest, company and disrupted the whole brick and mortar, services business across the board, whether it be pharmaceuticals or groceries and anything and of course AWS, his payment system. That's what you're supposed to do at these early stages of development of a business. If you want to dominate, that's what you do. But unfortunately, everybody's gotten hooked right now on the wrong, metrics in this industry. And I'm not going to fall prey to that. I'm going to keep doing what I think is the right thing to do, because I've done this a few times before. I've got a few years on a lot of the other guys operating in the sector, and it doesn't make me better. It just gives me a little bit more experience in building companies, and I know what I need to do, and Curaleaf is going for growth. That's our focus.
Boris, do you think home grow could be a threat?
No, because listen, everybody was, were the stills a threat to alcohol? No, eventually they all went out of business. I mean, scale guys puts all these people out of business.
Well said, Boris, and thank you for that wisdom. And that's just another reason why I tried to make it a priority not to get sucked into the short-term price action and price movement, because I know that these are solid companies, some of the fastest growing companies in the U.S., in an emerging market in the U.S., and near profitability, and could be profitable if they stop spending. So again, it just goes to show, zoom out, big picture, we have barely even entered the second inning. And on to some news out of New Jersey is they will start accepting applications to run legal cannabis businesses next month. Now keep in mind, this is new applications, especially from social equity entrepreneurs, from my understanding, not existing operators in New Jersey. So the Cannabis Regulatory Commission on Tuesday announced it would open the application process to cannabis growers, processors, and testing labs on December 15th. It will open applications for dispensaries on March 15th. So all these delays clearly are not helping any of these social equity applicants in these states. There are no deadlines to file applications. The Commission will accept them on a rolling basis. Only cultivation licenses have a cap, with 37 new licenses can be issued between February 2021 and February 2023. While the legal cannabis law set a deadline in September for the Commission to begin licensing new businesses, but regulators did not meet it, and instead announced that they had adopted a system to help process the applications when the time came. And the cannabis legalization law mandates legal sales begin by mid-February, or 6 months after the commission adopted its initial rules. But without new businesses, it's unlikely the state will set a start date for sales by then, sadly. And this just goes to show that, hey, if you were working for a company or a corporate company, a private company, and your job was to get something done by a certain date and you did not get it, guess what would happen in that corporate or private environment? You would get fired and replaced by someone who can do the job better. Sadly, though, as governments grow and bureaucracies get bigger and slower, we just see delays like this, which really just sucks for, the social equity entrepreneurs that want an opportunity in here. But that is the reality as well, is why we always see things work more smoothly and better in the private sector versus the public sector. While New Jersey currently has only medical cannabis dispensaries and growers, they will get a first shot at selling to the public once they certify that they have enough cannabis to meet patients and public demand and pay fees to expand their licenses to the recreational market. But those dispensaries said they could start selling to the public and that they have an excess amount of cannabis stocked up, as I reported on Wednesday's video. So obviously back and forth, it seems it's just like the state of New Jersey doesn't want to get the ball rolling quickly. I don't know why they wouldn't want to help the businesses and the constituents in their state. Makes no sense to me. And on top of that, I just wanted to share a few ideas because, as much as, you vote a party into power and think that they might keep some of their promises, and sadly they don't, Veterans Affairs rejects cannabis research as veterans plead for medical pot. So how can the Democratic Party really say, Happy Veterans Day, or try and pay homage to their veterans when they're denying the current veterans access to equal medicine that they could get right now? It's just insane. So I think any leadership in the U.S., at least that has power right now, that can potentially reform laws to benefit citizens and allow them more access to cannabis, should be ashamed of themselves. They should not be celebrating anything. And this is why the American people need to pay attention and vote in a new party next year if need be, because if your state reps and your senators are not going to be working in your favor, it's a pretty useless vote. As scientists say, the VA and the DOJ have a history of stonewalling anyone who wants to conduct trials of plant-based or plant-derived cannabis for therapeutic purposes. And just because yesterday was Remembrance Day in Canada and Veterans Day, it's just worth pointing that out. That, how can they be such hypocrites? And then on top of that, DEA moves to deschedule a cocaine-derived drug while cannabis lingers in Schedule 1. And it's adding fuel to the fire. The Drug Enforcement DEA is moving to deschedule a controlled substance that's derived from cocaine after receiving a petition for the policy change. It's the kind of action the drug policy reform advocates have hoped to see from the agency for Schedule 1 drugs like cannabis and psilocybin. But for now, DEA is proposing to remove the cocaine derivative from Schedule 2 and fully remove criminal and civil penalties associated with the compound. And it's a sign that the scheduling review process can result in changes, even if it's onerous and takes years to complete. But that process so far has not served advocates who've repeatedly petitioned the DEA to fully remove cannabis from the Controlled Substances Act or to merely reschedule it on the basis that it has medical value and low abuse potential. No, those petitions have been denied over and over, despite lawsuits challenging the agency's decision. So again, just goes to show that they want to appear like they're righteous and that they're doing the right thing based on morals, but they're clearly just serving whoever wants to make money from getting this out of the CSA classification. So it's just insane. I don't know who's controlling the U.S. government. It seems like with decisions like this and the fact that they don't want to allow cannabis, seems like Big Pharma has a big sort of, hand in their pocket. Tech also likely does too, but it's just pathetic and reason for the American people to start paying attention and vote politicians out that aren't going to deliver on their promises. And then lastly, just wanted to share this tweet. Bonus episode, Sifting Through the Smoke, Danny Moses and Brady Cobb on key developments in the cannabis space. So I just wanted to share this as it is a great podcast episode, a bonus episode with Danny Moses, who is from the movie The Big Short. He is one of the early investors that, alongside Michael Burry, did get in on that and was featured in that movie. He has been quoted as saying cannabis is the big long. So Brady Cobb goes on there with Danny Moses to highlight the new development of Nancy Mace introducing the Republican bill and why he is very bullish on SAFE remaining in the NDAA and passing by the end of this year. So I listened to it yesterday. It's a great listen. Brady Cobb is so well spoken and delivers the information in such an objective and just deliverable, digestible way. So I would recommend any cannabis investor tuning in and listening to these here. But that is it for today's episode, folks. So I really hope you got some value out of it. What did you think of the stories mentioned? Let me know in the comments if you have any questions or concerns, and I'd be happy to address them. Besides that, if you enjoyed this, please leave a like, or if you learned something, as it really helps out my channel. Subscribe below if you don't want to miss any future videos, and I will catch you on Sunday for This Week in Cannabis News. Have a great Friday and a great weekend, everybody.